Yeah, well, good morning, John. Well, we have to talk about Bitcoin because a lot of the headlines that you're seeing is that Bitcoin volatility, well, it's at it again. Yesterday, you're seeing a 6% drop in Bitcoin against the dollar. But here's the thing, a 6% drop isn't even a 2 standard deviation move. And that's really what inspired my chart of the day today. For our radio listeners, it's Bitcoin on a classic Tom Keene logarithmic chart. But what I really want to point out is the line over the last 5 years. It's kind of trades basically sideways for the first 3.5 years, then this massive boom in 2020. And then you hit 2021, where once again, on a longer term chart, you kind of see Bitcoin largely trade sideways, a slight uptrend, but at the end of the day, not as much gains, not as much of a reward for the risk that you're taking on, not just regulatory risk, of course, in the United States and in China as well, but the idea that simply volatility, sure, you can make big gains from Bitcoin, but you can also lose a lot. And that's really what my chart illustrates here.
Well, and Kriti, wasn't this supposed to be the year that things started to change, that you were going to get more institutional adoption, you were going to start to get the regulation coming in, which actually might stabilize the market, give it, a little bit more credentials, and you were going to get a Bitcoin ETF, which we got the futures one. All of those things, though, didn't necessarily have the effect that they thought they would.
Well, a lot of the optimism, Kaylee, was based on those kind of monumental gains that you saw really in 2020, a massive boom in 2020 that then actually kind of plateaued in 2021. And the assumption there was that it was all because of this kind of institutional adoption. But if you actually look at what the trade was, a lot of it was kind of macro. A lot of it was based on this recovery trade that Bitcoin kind of became this risk proxy of. If you compare it to, say, emerging markets, to the S&P 500, for example, to even to those inflation break-evens, or the 5-year forward break-evens, I should say, that kind of predict what inflation is going to be like in 5 or 10 years, that's going to be the risk proxy that Bitcoin kind of follows. So it really brings to the question how much of that trade was actually fundamental in nature based on this broader adoption, as opposed to how much of it was more of a symptom of the broader macroeconomic trade.
Well, and I would argue that the drop we've seen in December has been really related to the macro trends as well. As John knows very well, I started covering Bitcoin myself about 10 years ago, and I delved deep into the community at various Bitcoin bars and online in forums. A lot of the concern at the beginning of this thing was that fiat currencies would just be endlessly printed and devalued. And that's why they would argue you saw Bitcoin rise as we saw the Fed balance sheet swell and fiscal stimulus pour out, the U.S. debt levels rise. Now, as the Fed turns around, and we've seen basically that happen at the beginning of the month at the same time as Bitcoin began to come back down from another high. That's when you see this big drop in December. As they start to take away the punch bowl and talk about at least ending bond purchases and starting to unwind the balance sheet. Kaylee points out the sequencing isn't clear, but we know that's their plan. Right. And that may be why we see Bitcoin coming down.
Yeah, totally a possibility. And what you're also bringing to the point, which I think is really crucial in this whole conversation, is the dollar and how much of the story is actually the dollar as opposed to the cryptocurrency as a result of what you're seeing not only with the Fed, but perhaps haven flows around the world. This was a point that yesterday the Coinless CEO brought on our afternoon close program. He said that when you're kind of evaluating the long-term ability of Bitcoin, compare it to the dollar, compare it to the idea that Bitcoin is not only being used for more transactions, but it's not Bitcoin alone that's kind of growing. It's cryptocurrencies broadly. He was talking about blockchain technology. The bull case for cryptocurrencies isn't just in the use case of Bitcoin, it's in things like blockchain technology, which he said is becoming essentially the new revolution, the new kind of early adoption of what will be a revolution in application software. So that's something to consider as we go, like I said, into the longer term Bitcoin and cryptocurrency trade.